There has been a major change in the real estate market and we need to talk about it. As usual, the presidential election is creating chaos and the real estate market is seeing major impacts because of this. Or is it?
Brace for impact.
Hi, I'm Sarah Maslowski with KeyPoint Homes Group, a local real estate agent right here in the Northeast Metro Atlanta area. And I specialize in helping clients from all over the country relocate right here to Georgia. Election years always bring major uncertainty in the real estate market, and this year is no exception. However, it's not necessarily the election that has had the most impact on what's currently happening in the real estate world. I talked about this recently, but I have heard from buyers quite a few times here lately that they feel like prices are going to drop and the market is going to crash. So let's discuss why this is not true and what is really going on in the market and what impact the election will or will not have on home buyers and sellers this year. For starters, the reason home prices will not tank is because we do not have enough inventory for that to happen. The reason we do not have enough inventory is because 60% of homeowners have an interest rate below 4%, many of which who have much lower rates than that. Some people even in the 1.9s or 2s. People know in this economy they cannot give up their current payment. They bought when home prices were much lower or bought several years ago when things were way more affordable, and they refinanced when interest rates were low. So meaning that their monthly payment is a fraction of what it would be if they bought a home today. These very low mortgage payments are, for some people, the reason that they are able to keep their heads above water with inflation the way it is, and they have zero interest in giving up those monthly payments in exchange for a higher monthly payment for a similar size house that costs more money. Obviously, this makes a lot of sense. No one wants to trade a house payment of $1,200 for a $4,000 one. So it makes sense why people are not selling their home unless they absolutely have to. There was an article in the New York Times recently about how it's not as much a challenge that interest rates are high at the moment, because historically a 6 to 7% interest rate is quite average, but more so the fact that so many people are locked in at a rate 3% lower than that, which has created a scenario where people are essentially stuck in their current homes because of the massive price difference. If you bought a house for $500,000 back in 2020 with an interest rate of 2.5%, you're looking around a monthly payment approximately just shy of $2,000. But if you bought that same house for $500,000 at a 7% interest rate, you're looking at a monthly payment of $3,300. That 2.5% interest rate means you are paying around $211,000 in interest over that 30-year life of the loan. If you compare that to the 7% interest rate, it means you're paying a whopping $697,000 in interest over that same 30-year period, and that's to say if you're staying in the house for that full 30 years.
We are not moving anywhere.
Not to mention a $500,000 house in 2020 is likely to be a $650,000 to $700,000 house in 2024 here in the Metro Atlanta area. So that's fun, right? However, we are starting to see interest rates make their way down, which will give some sellers the freedom to sell their home and purchase a new one without doubling their payment in the process. At the time of filming this video, I had some clients that were locking in interest rates in the high 5s. Now, something I often hear during an election year is that buyers are going to wait because they are unsure of what rates will do when there's an election happening. Historically, the Fed tries to stay out of changing rates around the time of an election because the Fed tries to avoid politics and keep their independence. And if they were to cut or raise rates around the time of an election, candidates begin pointing fingers and say they are working in favor of one party or another, depending upon who is in office and the way that those rates move. Because a rate cut could boost the economy and encourage voters to reward the incumbent political party. Some economists argue that an election year has no impact on rates, while others argue that it does have an impact. But historically, interest rates have a tendency to lower during an election year. The Fed likes to create stability during a time when there is a lot of uncertainty. So historically, they have lowered the Fed interest rate in order to create stability in the economy. Now, keep in mind that the Fed interest rate does not have a direct effect on mortgage interest rates, but they are related. Up until just a few days ago, everyone has been waiting for the Fed to gather in September because this is when it's anticipated that they are going to drop interest rates. Though the Fed, like I said, technically does not drop mortgage interest rates, but when the Fed drops rate, mortgage rates usually coincide a little bit as well. A drop in mortgage rates would allow some of those people who feel like they are stuck in their current homes because of the low interest rates they secured in 2020 and 2021, it's going to make a new home purchase a little bit more affordable.
Oh, here's an affordable place.
Well, recently on August 1st, the Fed had a meeting and they made indications that they were almost certainly going to drop the Fed rate in September due to the unemployment and several other factors of the economy. Like I mentioned earlier, the Fed itself does not control mortgage interest rates, but their decisions do lead to adjustments in mortgage rates. Since the Fed indicated that a rate change was almost certainly on the horizon, mortgage interest rates reacted to this and dropped in preparation for the Fed's decision in September. Right now, at the time of filming this video, a well-qualified buyer is now looking at an interest rate of around 6.3%, with some even looking at an even better rate, like around 5.99 to 6.125%, depending upon your lender, credit, down payments, all of those good things. If you compare this to just 1 month ago, on July 3rd, the average interest rate was 7%. If you were to pay $500,000 for a house at that 7% rate back in July, your monthly payment would be around $3,355. Of that, a total of almost $708,000 in interest over the life of that 30-year loan. If you were to buy that same $500,000 house with today's rate of around 6.395%, that monthly payment is more than $200 cheaper at $3,125 and nearly $83,000 cheaper over the life of the loan when you factor in all the interest that you're going to pay. Another big thing to note is that because we saw rates take this big jump down, we likely won't see another major change come in September. And this is very important for you to know. And this will act as the big drop in rates. It's already happened. I spoke with two of my trusted local lenders to get their opinions on what was transpiring in the market with these new rate cuts, and they both anticipated that things would be rather volatile over the next few months leading up to September, when the Fed is anticipated to drop rates, and afterwards. And they agreed that since mortgage rates are lowering now in preparation of that announcement, they likely won't go down much in September, and now is the best time to buy while things are at their lowest. Because there are just so many factors that go into mortgage rates, it's impossible to predict exactly when things are going to change, but they will basically roll up and down over the next few months. For example, I just helped some amazing buyers go under contract on a home here on Lake Lanier. They spoke with my local lender this morning, and at that point in time, they were looking at a rate around 6.6%. Just a few hours later, the lender went in to look at numbers again, and rates had dropped, and they were able to lock in a 6.125% interest rate. A 0.5% is a huge difference in your interest rate, and that happened just over a few hours. Over the lifetime of the loan, that's nearly $70,000. My big takeaway here is that you need a really great lender who stays on top of rates hourly and calls you and says, "Oh my gosh, this is what rates are doing. I think we should talk about locking in." A great lender can make or break your home buying experience. Now, it's been a while since I have given the reminder that big national banks and lenders like Rocket Mortgage are not going to do this for you. I'm currently representing a seller, and the buyer of their home is using Rocket Mortgage as a lender, and they have nearly blown up this transaction twice. We still aren't fully out of the water, but I know for 100% certainty that if we were using one of my preferred local lenders, or let's face it, pretty much anyone other than Rocket Mortgage, we wouldn't be dealing with the battles we are up against now.
What a terrible experience, terrible people.
As someone who has done hundreds of real estate transactions over the years, I have seen this happen time and time again. So I can't stress enough how important it is to have a really great lender. one that we can call on nights or weekends when things are hitting the fan, and problem solve and troubleshoot whatever might come our way. If rates are going to be riding a roller coaster over the next several months, you need someone who is going to be fast and responsive to you and feel a personal connection to you and your home purchase. Now, we just talked about how so many people are locked into their mortgage rate, but with rates making their way down to the low sixes and even into the high fives for very strong buyers, this couple $100 a month savings is enough to draw out buyers who have outgrown the house they bought back in 2020, or the people who are back in the office and now have a crazy long commute that they didn't account for. That savings might be enough for them to get back in the market, and all of the people who waited on the sidelines over the past few years in their rentals or homes that didn't fit their needs, they are going to be gearing up to make their way back into the market. When that happens, we are back to bidding wars, even lower inventory levels than what we currently have, and you guessed it, higher home prices. Obviously, this will be a challenge for buyers when more competition enters the market, but think about all the people who secured a home a few years ago with a great interest rate who have now built a ton of equity in their home. I would love to know your thoughts on what impact you think the election is going to have on the housing market, and if you have noticed that interest rates have dropped and what your plans are. Are you considering a move here to Georgia? You're going to need a highly skilled agent to help you navigate this market, and I would love to be that agent for you. You can reach me by clicking the link in my pinned comment below this video. If you want to learn more about the real estate market here in the Northeast Metro Atlanta area, make sure you watch these videos next.